And good morning to all. Gold is unstoppable. After rising, I think it was mixed on Monday to be fair, could have been a green day, but still didn't really rise. So after rising Tuesday and Wednesday, the metal is surging again, even earlier Thursday, hitting a fresh record high of 5,618, 2015. You call it, makes no difference really. We are witnessing a continuation of that storm that we talked about the sell the dollar trade, right? We also have Fed uncertainty following yesterday's FOMC, um, with two of the officials breaking ranks to vote for an immediate cut. And we also, of course, the criminal investigation into Chair Powell at a time where it's not just the confidence of the Fed's independence is shattering, but also we are looking at potential announcement of his nominee in May and might be a dovish peak. And at the same time, we also have escalating war risks. Okay, and following Trump's comments, actually he warned Iraq to strike a nuclear deal or face military action. So there is a lot of things that actually combine together, okay, that are adding to the fuel to this upside in gold prices, okay, and crucially, of course, the dollar collapsed to 4-year lows. Okay, and this is happening despite Treasury Secretary Dissents yesterday confirming a strong dollar sort of policy. And that was because Trump actually himself signaled that he's tolerant of currency weakness to fight tariffs. Um, so there is really no other option for us to really start looking all the way back on the weekly chart. Why? Because we first of all see zoom out and see the entire picture, and secondary to find a potential peak. And you'll be surprised with some of the analysis or the findings. First of all, I want to tell you that typically, trends are moving in particular slope. So we use that channel to identify how sloppy a market can be. So evidently, this is a very accelerated trend and a parabolic move. So when this happens, we copy and paste that same channel and we try to measure the two standard deviations or the deviation on top of the other to actually understand where we could find a peak. So this middle is the middle line, and this were two standard deviations below and two standard deviations above. And we are seeing that we've also broken above that level, which makes this run very, very, very extended. I talk about Elliott waves quite a bit sometimes because they do make sense, and we see a clear 5-wave leg. Okay, here currently. Let me just pull this a little bit further down so it doesn't look too cluttered. Okay, so we're looking here at wave one. Excuse me. In the longer term, right? Wave two, wave three, wave four, and that is an extended wave five, which in commodity markets is typically the case. Okay, we see the fifth wave extending. Now, using the net distance of all of these waves, yeah, we come to a very terminal Fibonacci extension. Very terminal meaning the latest that you could probably see. It's very rare for any fifth wave to cross above that level. Of course, unless if we're not in a fifth wave, that could be you know that could be also a probability here. So you see, we've broke above the 3618 Fibonacci at 5,380, and we are currently, uh, should we continue higher, aiming for the 6K, which is 4,000, the 4.236 Fibonacci extension. Okay, so a big level and a big move to the upside. The RSI isn't stopping. It's actually going to break that divergence if it continues higher. Now, apart from that being, of course, a huge psychological level, it's also a huge long-term Fibonacci extension level. And I will tell you something else. If we kind of come down to the 4-hour chart, and we actually did this in our previous video, but we can do it again. We're going, if we do the same process. We're going to connect waves 1 and 4, and you're not going to see much on that end, but just to confirm that we are way past that level, not just 2 standard deviations. You might perhaps see that even we are above 3 standard deviations, assuming that will be the middle one, like over here. So this is a very extended leg, right? But also using these waves, the net distance between waves 1 and 4, we comes over here. We are currently above the 1618 and facing resistance of 5,620. But interestingly enough, I want you to see where the 2618 comes. The 2618 Fibonacci extension of the shorter term 1 to 4 net distance, it's fractally, this is exactly what a fractal means on the multi-time frame, yeah, comes exactly at that same level. It is a different Fibonacci, of course, but still, we have a huge resistance at 6K, guys. And to me, given also that last leg to the upside, and let's not forget, we are in a week that we are also facing a US government shutdown, partially, right? And we are facing it still, and it's just Thursday. We are just hours away. Okay, I wouldn't be surprised if in the following days, if there is no resolution on that end as well, we see gold targeting the 6K. But that it's probably going to be a very strong support, resistance, excuse me. Now, here's the interesting part, okay, because we are looking at the 618 as well, which seems to be coming at the previous Fibonacci in the longer term, right? The 5,375 or so, 50 or 40, it's a very important support. This is going to be the line in the sand. Losing this means that we could go all the way back to 5K. Okay, but for now, and as long as the drivers remain, it looks like to me that this could extend higher. And if we measure the distance from the 100 to the 161 Fibonacci, we also see a potential different target that brings us up to 5,850 or so, which again, it wouldn't be a surprise if we extended to that, shy of the 6K, and then did the pullback or the reversal. It wouldn't be surprised. These things typically happen. The important thing to mention is that the 6K is a magnet zone, and one way or another, again, if the fundamentals don't change, okay, then it could be that we are heading towards that level. We are definitely in uncharted territory with prices far outside any standard deviation means. A pullback is possible, but the trend is pointing to 6K.